Welcome grade 10 to June examination 2023. Okay, today we are looking at question 1.2, analysis of transactions. What are the requirements? Enter the following transactions in the cash journals in the columns provided. The account to be debited, the account to be credited, the journal and the amount. Okay, fine. Let's move on to 1.2.1. Pay CBA traders via EFT 71 for trading stock 15,300 less 10% trade discount. So here you just have to remove the trade discount and you record the balance. Okay, so this is how we do the calculation. We are going to say 15,300 multiplied by 90% because we have removed the 10%, which is going to give us something like, let me check on my calculator, 13,770. So this is the amount of money that we are going to record. Okay, on the account to debit and the account to credit, remember all accounts, they belong to the accounting equation. I want you to follow this. We have got assets. Okay, we've got assets. We've got owner's equity. And then we have got liabilities. All ledger accounts appear here. Okay, find all assets. Okay, we have got our debit side and our credit side. All assets increase on the debit and they decrease on the credit. Owner's equity increases on the credit and decreases on the debit. And then liabilities increase on the credit and then they decrease on the debit. So you need to remember this so that you always find yourself recording on the right side. Okay, so let's go back to the transaction. We paid. The moment you hear the word, you read pay, it means bank is there. There is bank. What did we pay for? We paid for trading stock. So there's bank and then there's trading stock. Bank and trading stock. Okay, where do we find bank and trading stock on the accounting equation? On assets, owners, equity and liabilities. Bank is an asset, trading stock is an asset. So this one is an asset, this one is an asset. Okay, what is happening to our bank? Because we paid, bank is decreasing. What is happening to the trading stock? Because we bought it, it's increasing. Okay, so we already know the account that we are going to debit. We debit when an asset is increasing and we credit when it's decreasing. Okay, bank is decreasing, therefore we are going to credit bank and debit trading stock. Okay, so I'm going to indicate a 1.2.1. the book is the CPJ because we purchased, and then the amount is 13,770. The account to be debited is the trading stock. Okay, the account to be credited is bank because we paid. Okay, let's move on to 1.2.2. Pay delivery fees. The moment we say pay again, we know that there is bank which is going to be affected. What did we pay for? We paid for deliveries of trading stock. Okay, deliveries of trading stock, they affect the trading stock account. Okay, so the accounts that are going to be affected there, we have got bank again. Okay, I'll just write B, and then we have got trading stock again. Deliveries of trading stock, they affect the trading stock. Okay, how? They increase the value of the trading stock. Okay, because we paid, it's a minus on the bank and then it is a plus on the trading stock. Remember, these are both assets. Bank, if it's a minus, it means it is decreasing. Okay, so here we are going to indicate bank again. On the credit side, our trading stock is increasing and assets increase on the debit side. So we're going to indicate like this, and then the amount is 444, and then the book again is the CPJ because it is a payment that you are looking at. Let's move on now to 1.2.3. A direct deposit of 1,250 to M. Madeira, a debtor to settle his account 1,350. So here a debtor is paid money. Okay, we have got a debtor paying money is 1.2.3. 1.2.3. We have got a debtor. Okay, what happened? He paid, so it means there is bank. Okay, all right, fine. Debtor and bank. Okay, again we need to identify a debtor is an asset, bank is an asset. Okay, let's go back again. A direct deposit. Okay, he paid money into the bank account, so the bank is increasing. Okay, we are receiving money from a debtor, so the debtors are decreasing. Okay, so it means the asset which is decreasing is the one that we are going to credit, the one that is increasing is the one that we are going to debit. Okay, at the same time, let's read again the statement. It says his account was valued at 1,350, to mean that the business allowed him a what? A discount. Is it there is a discount that was allowed. Okay, so we are having a discount allowed. How much is the, okay, so we are also going to say debtors and then the discount that was allowed. Discount allowed. Debtors, we remember there is an asset, and discount allowed, it is owner's equity. Okay, owner's equity always decreases. I mean, discount allowed is an expense, and then all expenses always decrease owner's equity. What is happening to our debtors at the same time? The debtors are also decreasing at the same time, is it? So what do we do when debtors are decreasing? When debtors are decreasing, we are going to credit, okay, because debtors are assets. Okay, and then what about a discount allowed? Discount allowed decreases owner's equity. How do we decrease owner's equity? By debiting. Okay, the same thing here, we're crediting here, and then bank is increasing, we are debiting our bank. So we already know what to do. The amount, okay, the amount here is 1,350 minus 1,250, okay, which is equal to 100, the discount, and then here is the 1,250 which was deposited. Okay, so let's record our amounts. Okay, the book again, since money is being received here, of course, is the CRJ. Okay, the amount is 1,250, and then bank. Okay, and then here we've got debtors control. Okay, we also have got debtors control here because of the discount, debtors control, and then here we've got discount allowed, and then the amount is 100. Okay, we are done with 1.2.3. Let's move on to 1.2.4. Debit order payment to municipality. Okay, we've got a debit order, it's a payment. 1.2.4. What did we pay? We paid the municipality 168 and 792. Okay, so we're going to say 168 plus 792, which is equal to 960. The amount, is it? We paid, is it? So it means there is bank. Okay, what did we pay? Municipality, we paid for what? For the usage of water and electricity. So there is water and electricity. Okay, all right, so bank, we already know it's an asset. Water and electricity, we know that it is owner's equity because it is an expense, and all expenses, they always decrease owner's equity. What is happening to our bank? Because we paid, our bank is going down, and then the owner's equity is also a minus on the owner's equity. A minus on the owner's equity is debit, and then a minus on the asset is credit. So we know what we are debiting and what we are crediting. We are crediting our bank. We are going to credit bank, and then we debit water and electricity. Water and electricity. Okay, and then the amount is 960. And then the book, since it's a payment, is the CPJ. Okay, let's move on to 1.2.5. 1.2.5. Okay, receive an amount from Allied Bank for a fixed deposit of 10,000 and interest and 8% per annum for 3 months. Okay, all right, it's 1.2.5. 1.2.5. We received a fixed deposit, is it? It means the fixed deposit matured. We are receiving it back into our bank account. Okay, so we have got a fixed deposit. And then we also have got bank. Okay, fixed deposit and bank. Okay, fixed deposit is an asset, it's an investment. Bank is an asset. So one asset is increasing and then the other asset is decreasing. What is happening to the fixed deposit? It is decreasing because we are removing money from the fixed deposit account and putting it where? Into our bank account. So the bank is increasing, and it came back with interest again. Okay, so we have got another bank again. Okay, for the interest, we are receiving the interest, and then we are also going to indicate interest is interest income. Okay, interest income is part of owner's equity, and it also increases owner's equity. Okay, all right, so fixed deposit, I said, is an asset, and then bank is an asset, and then interest income, okay, it is owner's equity. Let me write it here. It is owner's equity. All right, so owner's equity is increasing. Owner's equity increases on the credit side. Bank increases on the debit side. Bank here increases on the debit side. fixed deposit is an asset decreasing, and it decreases on the credit side. I hope you fully understood me here. Okay, the fixed deposit is coming back to the business. So here I'm going to indicate, okay, the amount is 10,000 for the fixed deposit, which is coming. And then the interest, I have to calculate the interest. Okay, let me just first of all record the fixed deposit. So the account to debit is bank, where the money is coming back. And then we are going to credit fixed deposit. Okay, and then now we need to calculate the interest. They say the interest is 8% per annum for 3 months. So for the interest, I'm going to say 10,000 multiplied by 8 over 100 multiplied by 3 months over 12, which is going to give me something like 200. So our interest is 200. So I'm going to indicate here, okay, 200 rand, and then it's coming back to the bank account, and then the account to be credited is the interest on fixed deposit, or the interest, okay, interest on fixed deposit, or interest income, interest on fixed deposit. I hope you fully understood that one. Okay, and then now we are moving on to 1.2.6. 1.2.6, pay the account of Susie Traders per EFT 3,200 after 5% discount was received. Okay, that is a payment that is being made. We are making a payment. 1.2.6. okay, let me indicate here 1.2.6. a payment is being made. So whenever there is a payment, what are we paying? Creditors. So we have got bank and creditors. Bank and creditors. How much money is being paid back? They said pay the account of pay EFT 3,200 after a 5% discount was received. Okay, so we need to remove the 5% discount, is it? We need to calculate the 5% discount. Let me go to my calculator. Okay, 5% discount, it means we are saying 3,200 multiplied by 95%. Okay, I'm sure we'll remain with something like 3,040. Okay, 3,040 is the money that is supposed to be paid, okay, to the creditors. And then it means we have got a discount. We have got a discount received of 5%, is it? So if you say 3,200 minus 3,040, I'm sure you get something like 160 for the discount received. So the discount received, it's also going to be against the what? It's also going to decrease our creditors. Okay, so bank and creditors, what is happening to our bank? Because we are paying, bank is an asset, remember, and we are decreasing. Okay, creditors are decreasing also at the same time, and creditors are liabilities. Okay, bank when it's decreasing, we credit. Creditors or liabilities, when they are decreasing, we debit. Okay, discount received, it is income, it is owner's equity. What do we do with discount received? Because it increases owner's equity, okay, it is going also to increase the owner's equity. So we are going to discount received, we are going to credit. Okay, and then the creditors, we are going to debit them because they are decreasing. Okay, now we do have to record the amounts where they are supposed to be. Okay, the first thing where I'm going to record, okay, the amount here, okay, is the book, of course, since it's a payment, is CPJ. Okay, the amount here, remember I said is 3,040, and then the discount is 160. 3,040 is the money that was being owed the creditors. We've paid. Whenever we pay creditors, we debit them. Creditors, okay, and then it's creditors against what? Okay, bank. All right, and then here is creditors against what? The interest. Oh, sorry, the discount. It's supposed to be discount against the discount that has been received. Okay, I hope you have fully understood that one. And then let's move on to, okay, fine, the book, it is the CPJ. The book is the CPJ. Okay, for number 1.25, it was a CRJ. Okay, CRJ. Okay, and then 1.2.7. 1.2.7. Let me do 1.2.7. I don't know whether there's a calculation. Receive the bank statement from Absa Bank. Bank charges for the month. Okay, I'll just do the double entry for you. Bank charges. So we've got bank charges, and then bank charges against our bank, it from our bank account, and bank, And then we also have interest on bank overdraft, interest on bank overdrafts, okay? And then it's also against our bank. All right, okay? So this what is a bank charges. They are owner's equity, okay? Bank is an asset. Interest on bank overdraft, that is owner's equity because it's an expense. And then bank is an asset, okay? So these are our accounts. This is our double entry, okay? Fine. So what is happening to our bank charges? Okay, bank charges or expenses, they always decrease owner's equity, okay? Owner's equity is negative, and then bank again at the same time it is decreasing. Is it? Bank is decreasing, bank is decreasing at the same time, okay? So if bank is decreasing, what do we do? Okay, fine. The bank charges we are going to debit, okay, because owner's equity debit whenever there's an expense, whenever it's decreasing. And then bank, when it's decreasing, we credit. Interest on bank overdraft, that is an expense, it also decreases owner's equity. Anything that decreases owner's equity, we debit. And then bank is decreasing, we credit. Okay, fine. That is the double entry there. I hope you have fully understood that. Okay, so what do we debit? Of course, it is also a CPJ. It is a CPJ here. Okay, the first transaction, okay, the first amount is how much? 665. And then here it is bank charges, bank charges, bank charges against the bank. Okay, and then here we've got interest on bank overdraft. We are debiting all expenses because they are owner's equity and they decrease owner's equity, and then against the bank. And then the amount is actually 120. Okay, so this is all for you, the double entry, the accounting equation, identifying your journal and everything. So it's very important that you remember this, the assets, the owner's equity and liabilities, because all these transactions that we looked at, they belong here. So the moment you know where they belong, you will not record anything on the wrong side. I'm sure you have understood my explanations. Thank you so much, Great Tens.